All right, David, welcome to the dirt. Talk to us a little bit about who you are, what you do, and why we should all lean in.
Hey Jim, thanks for having me. So my name is David Meniane. I'm the CEO for carparts.com. We're one of the fastest growing player in the online aftermarket part sales. We built a destination for auto repair and maintenance, and we just announced our 15th consecutive quarter of year-over-year growth. We were a $300 million company a couple of years ago, and today we're on track to becoming a $700 million company.
Wow. Wow. Sounds like a fun journey.
It's been an incredible journey, yes.
So
A
let's
huge transformation.
yeah, let's talk a little bit about that because you guys are a 20 plus year old company. You've reinvented yourself. You've done a lot to invigorate growth in the business. Let's start at your entry point, right? When you got engaged with carparts.com, what did it look like?
Yeah, the company was very different. I joined the company in 2019. At the time, I was the chief operating officer and chief financial officer. The company had about $2 million of cash. We were burning about $1 million a month, and we had about $20 million of debt. So, the company was, going through a difficult time, and our team came in and put together a new vision and a new strategy, and try to reinvigorate the business. And so we went on a journey to transform the business. Then COVID hit, so we had to adapt. And then over the last 18 months, we went through basically a second round of transformation since I was lucky enough to become the CEO. And so we built an exceptional team, a great business, profitable. And now we have a lot of cash, we have no debt, and we're still growing despite the challenges in the environment.
And you guys are publicly traded, correct?
We have been publicly traded since 2007.
Okay.
Our stock has been up and down. Right now, it's been a little tough in the stock market, but the underlying business is very solid, and our balance sheet is extremely solid.
All right. I won't take that as a stock tip, but maybe I will at the same time. How about that? All right. So you've done a lot combining. I think you've got 17 separate brands or entities that you kind of cobbled together under a single roof. Is that the right number? First off, and
Yeah, in 2019 we started and we had 17 websites.
Okay.
It sounds like a lot, but it was down from 300 websites about 10 years ago. So, part of our transformation strategy was really to focus and build a brand for carparts.com. So at the time the company had a different name, and we decided to double down on what we thought was a fantastic trademark that doesn't need explanation, that could get a ton of traffic. And today, carparts.com is our sole domain. It's the flagship domain of the company, and it gets 100 million visitors a year.
Wow, that's incredible. Can you talk us through any specifics around the evolution of the business model?
Sure. Yeah. At the time, about 5 years ago, the business was a combination of, private label product, a lot of collision parts, lights, mirrors, bumper covers. And over the last 5 years, we've been making some significant investments to scale our supply chain. So as much as externally facing, we're an e-commerce company. Internally, we look at ourselves as a supply chain, logistics, transportation, and data science company. So, the last 3 years, we've deployed over $150 million of capital, and that was to scale the supply chain, to open fulfillment centers, to grow our inventory position. And so if you look at our inventory position today, we went from $40 million of inventory to $135 million of inventory. What makes our business so unique is that we source high quality parts straight from manufacturers overseas. We bring them to our distribution centers, and then we ship them directly to consumers. So they can get the same quality parts that they get at a brick and mortar retailer, but for 30, 40, sometimes 50% of the cost. And it's the same quality. It's realistically the same product. It's just a different brand. So for customers that look for high quality items at a very attractive price, carparts.com is basically the number one destination.
So is it typically consumers that are buying direct from you, or how does that typically work out?
Yeah, it's typically consumer. The majority of our business is direct to consumer. Believe it or not, there's 300 million cars on the road today in the United States. And the average age of a car is 12.5 years. And we sell a lot of parts that are very easy to install on your own. You can go to YouTube. We have our own channel, but there's plenty of YouTube channels out there that explain how to do basic repairs. So if you want to change a headlight, a tail light, a mirror, windshield wipers, even brake pads, it's relatively simple and the information is out there. So instead of going to the dealer or a mechanic and spending $500 or $600 for a simple job, you can go to YouTube, you can buy a part from us for $100 and you can do the job yourself, and it's relatively simple. Now we do sell a lot of more complicated parts like suspension parts and steering parts and a lot of mechanical parts for the people that are a little more sophisticated, but we have a full assortment of parts. We do collision, we do replacement, we do accessories, we do consumables, we do maintenance items. That's what makes the business so unique, is that we carry a very wide assortment of parts for a lot of cars.
Got it. Got it. And when you, as part of your go-to-market, are you also, partnering with the cars.com and the Kelley Blue Books and those folks of the world that are, have a certain like demographic that's already going to there, or how are you, I guess, attracting customers?
Yeah, a lot of the customers come through carparts.com. So we have a very strong presence on Google, but we also have a blog that gets 8 million visitors. We have a
Well,
very, very large customer list with up to 10 million customers. So in terms of retention marketing, we have a lot of capabilities through the blog, through the email channel, through SMS, and then carparts.com gets a ton of visitors. And the other thing is, and that's one of the beauty of having a website and a company that's been around for a while, is that people are starting to know about us. They know about carparts.com. They know about JC Whitney, which is a brand and a trademark that we own that's been around for over 100 years. So we're lucky enough in that we get a lot of people that already know about us. And a third of our revenues come from repeat customer. So as we continue to make investments in our customer experience, as we continue to expand our assortment, we're seeing our customers coming back more and more. And that's the beauty of the business. Obviously, you want repeat customers.
so you mentioned something earlier before about financial stability and kind of general operational and financial health or discipline. Pick your nomenclature. But when you look at where you are now compared to where you were, and obviously we talk to a lot of founders, about a lot of business owners, about cash flow flexibility and about those same things that you probably went through. There's this one thing that you said before that stood out to me, which was focus on the balance sheet as much as the income statement. So I ask you, like, first off, what does that mean to you, and why is that so important to you and carparts.com?
Yeah, we're going to go through, and most companies go through different economic cycles. And sometimes times are very good, and sometimes times get more difficult. The consumer has more money or they have less money, more spending power, less spending power. We find that having a very strong balance sheet gives you that flexibility. So we've been focusing on, generating free cash flow, staying debt free, paying off all the debt that we had 5 years ago, and generating that ammunition. So the balance sheet gives you a lot of flexibilities to invest in the business when needed, to survive when things get tough. And so, we went through a very, very good time during, COVID and stimulus, and a lot of companies benefited from that acceleration of online. But now that times are getting more difficult, we're finding a lot of these companies spent all the money. They don't have a strong balance sheet. They're burning cash, and not all
Yeah.
of them are going to survive. Like, I'm seeing a lot of players in our space actually struggle financially, players that have been around for a long time, because they don't have the balance sheet. So yes, they focused on the income statement, they grew their sales, they grew their margin, but at the end, what pays the bills is the cash, not the sales. So we've been focusing on that, building our balance sheet. I'm lucky enough to lead an organization that's been around for 27 years. And I want to make sure that I leave it significantly better than when I found it. And I also want to make sure that in 25 years, the company is much bigger, much more well-funded, and still debt-free. So I like that peace of mind. I'm a big believer in financial discipline. You track every dollar and you do it on a cash basis. And that's been one of the things that made us so successful, is we focus on cash flow generation, whereas companies sometimes focus too much on growth at all costs. So we're balancing growth, profit, and free cash flow generation.
Are there any opportunities that you can speak to, or ways that you can speak to, of how managing this capital and towards cash flow flexibility has really impacted the company's trajectory?
Yeah, I think it's, there's a lot of things that reversed the path of this company. Obviously, it was in financial troubles 5 years ago, and cash flow generation was one of the key components.
Mhm.
Building a team, building a culture, having a focus, strategic priorities, simplifying the business, communicating to investors. Like, there's a lot of things that you need to do, but none of it matters unless you can manage your balance sheet and your income statement and your cash. Unfortunately, if you run out of cash, you go out of business and the music stops.
Yeah.
So for us, focusing on free cash flow has been what allows us to keep the music going. And as we go into a more difficult environment, next year, we think it's going to be difficult for the consumer, which means it's going to be difficult for more companies. We're seeing a
Mm.
lot of companies pull back because, they get nervous. For us, we can be very fiscally conservative, but at the same time, be very aggressive when it comes to investments. So we're making a lot of big bets. We're opening a big warehouse in Las Vegas, which is double the size of our current footprint. We're making investments in digital transformation. So next year, we're going to deploy a lot of capital. We're going to be very aggressive. But in terms of ROI, it's actually high ROI, low risk, high reward. So I'm actually quite excited about our ability to do that.
In your experience, where do companies typically get that wrong?
I think it's a philosophy, it's a mindset. For us, we micromanage cash the way a small private company do it. You see founders, when they start a company, they track every dollars, every new hire, every new contract. And we do this, I still sign every job offer that goes out. I still sign every contract that goes out. I still approve a lot of things that might seem small, but for me, it's very important because it adds up. When it comes to financial discipline, a lot of what companies get wrong is it's death by a thousand cuts. I hire one person and I can afford it, and I hire another person and I can afford it, and then three, and then four. But at the end of the year, you've hired 12 people, and if you pay them $50,000 a year, each of them, plus benefits, plus taxes, plus time off, it all adds up. So we
Yeah.
try to have that long-term view of, like, anytime I make a commitment, what's the impact on the financial statements for the next 2 to 3 years?
All right, let's talk a little bit about the something we haven't really talked a lot about on the dirt so far, which is working with institutional public investors and the impact of that connected to not only your financials but the business. What has been the most challenging part of working with these types of stakeholders?
I think the opportunity for me was to learn how to work with different institutional investors. So, the largest investors on our cap table are BlackRock and Vanguard. So obviously these are, mega index funds. And then we have smaller hedge funds that will trade in and out of the stock. Then we have very long-term focused investors. So what's interesting is that we tend to group institutional investors in that one big bucket, but
Yeah.
every investor has a different size, has a different portfolio strategy, has a different holding period. So obviously, what we're looking for is we're looking to maximize value for shareholders. That's our goal. That's why we exist. But at the same time, we're looking for investors that align with our long-term strategy. We're always looking for investors that have a long-term vision and a long-term holding period. But if you're an investor, even for one day, you're still an investor. And my job is to make sure that I maximize shareholder value for you. The other thing is our employees are investors. Our vendors are investors. So I like to think about this kind of multi-stakeholder ecosystem where we have the investors, the employees, the teams, the communities, and all of these. And our job is to create a long-term sustainable business that is good for all of these players. That's how we think we can win.
Is there anything that you know now that you wish you did back in 2019?
There's a lot of things that I've learned. Yes, it's things that I've always known. But when you go through it and you make mistakes, I like to think back about some of the mistakes that I made. A lot of times it's not making a decision fast enough. I'm pretty decisive. Our team is very decisive. A lot of times I'll find there is a decision that I know I need to make and I take a little too long, and sometimes I pay the price. But we live and learn. I have a 7-year-old daughter, and I tell her every time, sometimes you win, sometimes you learn. So we've been lucky that we've been winning, but we've been learning at the same time. And for me, as a first-time CEO, it's been a great journey because I get to evolve. I get to learn new things. I got myself a coach who's training me, mentoring me, helping me in the decision-making process. We got a good board of directors that's super supportive. So, I'm enjoying the journey. I'm enjoying making the mistakes as long as they're not fatal, and we just keep going.
You're a dad. I actually just became a dad a few weeks ago, which is pretty fun,
Congratulations.
pretty cool. Thank you very much. So I got a dad joke for you. How about that?
Okay.
What's a car's favorite meal?
I don't know.
Breakfast.
Nice.
Breakfast.
Yes. Well, our just to tie it back to our, I'm always in selling mode, right? Our brand of brakes is called Sure Stop. So break fast, sure stop. So,
There we go. Yeah.
yes, I
It's
like
almost
it.
like we planned that.
Yes,
Almost.
I actually, if you're not to go off topic, but I'll recommend a book that I've been reading that's really good. It's called Daily Dad by Ryan Holiday.
Yeah, I got it.
You got it?
I just got it. Yeah.
It's really good. So every day I take 2 minutes and I read that one page about how to become a better father.
Awesome, dude. Yeah, that's a good note. Good note. So back on the investor side, and really on some of the evolution of you and of your business, right? We I talked to a lot of COOs, CFOs, folks that were in your former seat. Some that have aspirations to be a CEO, some that don't want a part of it. And a lot of them that do want a part of it, as soon as they get there, they realize they're better suited, or they'd rather be in the CFO or COO seat. I'm just curious, like, as to your journey, right? It's been recent, but also pretty cool ride, I imagine. Pretty full of lots of ups and downs. What was it that made you want to get into the CEO seat, especially for this company, for CarParts.com, but also that has you excited to stay in it?
Yeah, it's funny. I got the opportunity. Our board of directors asked me to step in and become the CEO. So, I'm lucky enough that I didn't have to ask for it or lobby. But it's a fantastic journey. It's a lot of change. It's a big transformation. The requirements of the company and the business for a COO are quite different than they are for a CFO, and quite different than they are for a CEO. So, it took me a little time to kind of understand. Nobody's ever ready to become a first-time CEO. And looking back 18 months, I don't even understand how I got the job because I was not ready. There's so many things that you don't know, but there's a lot of things out there. There's a lot of people out there that I've spoken to. Our board has been, a great ally and a great partner. So I'm always looking to learn. And so I took it with an open mind and, what are the needs of the business? What are the requirements of the job? What do I need to do? What do I need to change to be an effective CEO? And then, try things. The other thing that I really decided to do early on is to stay myself. Everyone has this idea of like, this is what the CEO is supposed to look like and sound like. And I'm like, that's not me. I just want to be me. So I'll be kind of a different version of David, but it's still David. So, I like my style. I like who I am. And so I'm just having fun doing it. And I put in the work. So, I haven't taken a day off in the last 7 years, and I don't intend on taking time off. I love what I do. I love the team. I love the business. I love our strategy. And I think we have a lot of great things that we're working on. And my plan is that, in the next 3 to 5 years, the company becomes unrecognizable. I just want to make sure that when I leave the company, whenever that is, I leave the company significantly better off than when I found it. For me, for the team, for the shareholders.
Are there any one or two things that, you go back 18 months, you do different?
It's hard to say. There's just so many decisions that I've made, and some good ones and some small ones. I think there's some things that I did that I was very happy about. I'll tell you what I did is, as soon as I became the CEO, I spent a lot of time, and I've always spent a lot of time with our people, our vendors, to get a lot of the information. What I find is, we have 1,800 people in our company, and we have a lot of smart, talented, committed, and passionate people. And so a lot of the information about how to build a strategy, how to make the company better, what opportunities to attack was already out there. I didn't come up with anything. I just went out and I got the information from our people. I think what I would do differently is I would try to go faster. A lot of the stuff that I learned, I'm still putting into effect today because some of the decisions were difficult. It's going to cost money. It's going to take a long time. It took me a while to kind of find my voice, my CEO voice. I knew exactly who I was when I was a COO. You put on the CEO hat and it's overnight, right? You're supposed to be a different person. It's a different job, but there's no job description. So, if I could, I would go faster, but you know what? I'm very happy with where we are. The business is doing great. The team is fantastic. And so I'm happy with most of the decisions that I made.
Yeah, no, that's great, David. I'm curious, how's your leadership style evolved since you took on the role of the CEO?
The one thing that I changed a lot is I listen more than I talk. As a COO, I'm always very hands-on, and I spend a lot of time with our vendors, with our customers, with our partners. I'm in the field. I believe that you can't run a company from behind a desk. So I'm a big believer in that leadership style. So that hasn't changed. But as a COO or CFO, I was always expected to speak first. And so the biggest change is I try to be the one speaking last or not speaking at all. So I'll sit in a meeting with a team that I was able to build and recruit. And I think we have exceptionally talented people. So a lot of times I don't have anything to add. So I'll just listen. So, I have one mouth and two ears. And so I try to use my ears a lot more, even though it's not really in my nature. It's active listening. I have to force myself to I'm surrounded by really smart people. If I don't say anything, things will get done and we are going to succeed as a company. So that's one. The other thing is on the time management piece is that there's certain meetings and certain decisions where I'm no longer involved. I used to think that I needed to be involved in every single decision, and now I don't. And things are much faster, much smoother. And I think as a company, we're actually making better decisions now that I'm not in every single decision. So it's been a good journey, and I'm enjoying it.
Are there any call them pivotal moments or decisions that significantly impacted your journey as the CEO?
The team decisions are always tough. But a lot of decisions can be made without me, but there's a certain subset, and usually it's 1, 2, 3 decisions a year where I'm the only person in the company that has the authority to do that, and these tend to be the most difficult ones. And I have a team and I have a board and I have people that I can talk to, but ultimately, there's always multiple ways to skin the cat, and I have to be the one making that decision and then committing to it. So, the team, when you're a company that's been around for 27 years and you have your eyes set on building a multi-billion-dollar company, there's always difficult decision in terms of culture, team, capabilities. That's always the hardest.
Yeah, it sure is. The auto market's kind of interesting, and you obviously have your niche within it. But I'm curious in terms of the vast array of customers that you could target towards, and you mentioned you've got a lot of comeback customers, right? That have enjoyed your services or your products for a long time. What how does your platform cater towards different segments, and what are those segments?
Yeah, that's a really good question because we've been thinking about our strategic priorities for the next call it 5 years, and how do we grow the business. Option 1 is you sell more stuff to your existing customers. Option 2 is you find customers that are adjacent to your current cohort and figure out what experience and what products you can deliver to them to get more business. And we're doing both. So the first 3 to 4 years where I was at the company, we expanded our assortment. We went from mostly collision to adding mechanical parts, but there's a lot of items, there's a lot of categories that historically we haven't played in that we're now really getting into. So it's more brands, it's more categories, it's more products. But to your point, you have to create a unique experience to target that specific customer. So part of our efforts and the investments that we're making, aggressive investments that we're making for next year, is digital transformation, is building a platform that is scalable, but also modular, where you can make changes to specifically target customers. So today, and I'm really glad you asked this question, we have 100 million visitors, but we have one experience. And the investments that we're making is how do we take this platform and give ourselves the ability to target different customers that require a unique experience. So personalization is a big part of what we're doing.
Yeah, it's really really interesting. One of my friends just bought a gas station with a car garage attached. He's a longtime mechanic, right? Leaving Porsche, starting his own thing, and I'm thinking of his journey versus the truck enthusiast's journey versus the stay at home mom who just needs the car to get her kids from one place to the other.
I think the
And
key point is to make sure that companies like us, we try to think about uh, customer avatars or customer cohorts. It's like you have to pick a few. You can't go after every single customer base with every single product line. You can't be everything to everyone.
right.
So I think part of what's made us successful over the last 5 years is that ability to focus and prioritize around one category, grow this category, make it profitable, and start adding additional categories. So I think that discipline in terms of inventory investments and marketing investments is also super important.
What are those categories, or one of the categories that you guys have invested more in as a result of some of the knowledge you've gained?
Yeah, so the biggest category for us has been mechanical parts that require expert knowledge. So again, historically, we've been very strong in easier jobs, lights, mirrors, bumpers, brake pads. We're starting to really push in rotors, suspension, a lot of things that require you to pop the trunk and really start digging in. Certain belts, certain transmission components. We're finding that our customer is also sophisticated and that they know exactly what they want. They understand the quality that they want, but they also want it at a competitive price. They don't want to go to a brick and mortar retailer and buy a part for $250 when they can buy it from us at 119 or 125. So we're expanding that category, and ultimately, what we want is if you have a car, let's say you have the highest selling car in America, top selling car, which is a Ford F-150, right? Can we have every single part that is required to fix, repair, and maintain a Ford F-150?
With obviously a lot of regulatory pushes and increasing popularity of electric cars or electric vehicles, how is the parts industry evolving for this change in the vehicle marketplace?
Yeah, that's a good question. It's evolving. About 80 to 90% of the parts are relatively the same outside of the battery and some of the transmission components. But, you still need collision parts, you still need lights and bumpers, you still need brakes and suspension. So we've been expanding our assortment to target certain EVs. Having said that, it's only 2 or 3% of the car population out there. It's a slow growth.
Hmm.
And the other thing is the infrastructure in the United States has to catch up. And right
Yeah.
now, we're finding a disconnect between the goals and the objectives of the regulators, which is 50% of the cars are this much or this much by 2030, but the infrastructure is not following. So
Yeah.
at some point, there's going to be a disconnect between, hey, everyone needs to drive an EV, but how do we charge them?
Right. Right. Yeah. How do we get anywhere?
Exactly.
So the evolution or the integration of technology in vehicles has actually also been something I'm curious about your take on, because that's obviously been increasing rapidly along with the pace of technology change. How is CarParts.com adapting to this evolving nature due to advancements, AI, IoT, whatever tech you want to throw in there. How is CarParts.com adapting towards that?
Yeah, so interestingly enough, our sweet spot is really cars that are between 8 and 15 years old.
Okay.
So the cars that have a lot of, IoT electronic stuff haven't really reached our sweet spot. But I actually think one of the most interesting questions that we're becoming a part of this conversation is on the data piece. So who owns that data? If I'm a car owner and I buy, a car and it has all these bells and whistles, the data gets collected, but who owns it? So today, the car manufacturer owns them. As a
Hmm.
customer, I want to own my own data. I want to control my own destiny. So some of the things that we're doing is, we're investing in, you know, uh, the Right to Repair Act, for example, to allow customers to choose between OE parts and aftermarket parts. Educate the consumers out there that there's multiple solutions. I think the data piece is going to be quite interesting for me as a consumer, and this is my personal opinion. If I buy a car, it collects data. I want to own that data, and I want to be able to upload it and share it with whoever I want. And over time, I actually think carparts.com could be an interesting part of that ecosystem where you could collect some of that data, upload it to us, and give you a specific recommendation as to what you need to do. That's where I think the dealers and the OE manufacturers are pushing back, because they want you to go to the dealer. I want you to be empowered to fix your car on your own if you want to. And I want you to be able to come to carparts.com so we can help you and just give you the information that you need. Whether or not you buy the parts from us, that's a side conversation. We want to be a destination so we can help you fix your car and make better decisions.
Yeah, there's a lot of research I've recently looked at around brand loyalty versus the call it influencer loyalty, or basically away from the brand and more towards people that you idolize, right? Said differently. Are you seeing that in the car and truck marketplace where brand loyalty isn't quite what it used to be?
I think for me, I like to think about, it's not so much about the brand or the influencer, is, what are the company's values? What does the brand stand for? What is the emotional connection? What is the emotional reaction that you're trying to get? So, I've been buying Nike products for the last, call it 30 years. And when I think of Nike, I have this emotional reaction that it means more than just a brand. And so that's kind of what we're trying to do with, carparts.com or JC Whitney. So, I think influencers come and go. And they're a tool in the toolbox, but ultimately for me, I try to think about what's our brand proposition, what is the best way to communicate it to our customers, but stay true to that brand. What is the brand voice? What is the brand strategy? What is the emotional connection that we're trying to develop with our customers? That is really the most important thing. Influencer versus marketing is that's the tool.
Yeah. I'm curious, what is the emotional reaction that you're looking to get from your average consumer at carparts.com?
What we're trying to do is, instill this feeling of quality, of trust, and loyalty. Now, obviously, historically, our company was very good at competing on price. Now, we have a great supply chain. We source directly from, Taiwan or Europe or Mexico. We bring the parts to our distribution centers, and we can offer those quality parts at a very attractive price. But ultimately, you don't want to be cutting prices over and over and just be the lowest price in the market. That's not a long-term proposition to generate, free cash flow and build an exceptional business. So we've been really focused on trust, loyalty, and quality. That's the emotional reaction. That the other thing too is there's a lot of friction and stress when it comes to auto repair, right?
Yeah.
It's kind of like going to the dentist. If you have a weird noise in your car, you're like, oh, I got to take it to the mechanic. I don't know how much it's going to cost me. I don't know if it's going to cost me $500 or $1,000. What do I need to do? I want to be we want car parts to be, oh, you know what? There is a place out there that can remove that friction, remove the stress, and maybe help me, kind of like a trusted friend, and kind of elevate the experience and put you back on your journey, right? It's not about the parts. It's about the journey.
Yeah, and the content that you guys have produced, I gotta say, is top notch in terms of do-it-yourselfers that are looking for an easy path towards doing it yourself. It's great stuff, man. Really great.
Yeah, we've been really focused on developing that content around that brand, which is, here are the tools and here's the information that you need to fix your car. Now, if you want to buy the parts from carparts.com, here's the link. We're a destination. We have very attractive shipping options and prices. But if you want to buy the parts somewhere else, that's totally okay. We want carparts.com to be top of mind when it comes to empowering drivers to be on their journey. Don't think of us as a parts store or a parts supplier. No, we want to be a trusted friend, an advisor. And then should you choose to decide to buy parts from us, great. We'll take it. And we'll ship the parts very quickly at a very competitive price.
What in other industries, what advice would you give to other business owners that are, undergoing a similar strategy, content first, right? In terms of drawing in additional consumers, any lessons learned there in terms of content production, creation, flow through to marketing, anything along those lines?
Yeah, so for us, the big thing, which we implemented, this year, is start. So we just launched our podcast. It's called In the Garage Podcast. It's on YouTube, and we're already getting a ton of views. And so, some founders, some companies will just, go back and forth and think about the 10 different ways that they can to start a podcast. Our strategy was like, let's just launch it. Let's get to 100 podcasts, 100 episodes, and then over time, it'll get better. You cannot have a podcast that has 100 episodes that doesn't work, that is not good. You're going to find things. Now, we're lucky in that, we were able to produce it very quickly, great content, great information, entertaining, and it's getting a ton of views. But for me, it's just get started, right? Content marketing, retention marketing, branding, you got to start somewhere. Like the train has to be on the tracks and you have to start pushing the train. Even if it goes 1 mile per hour, it's moving forward. And eventually adding steam to it is easier. But just being still and just waiting for the perfect moment, that doesn't work for us.
Yeah, well, hopefully you don't have to push too many trains, but the analogy still sticks. That's good.
That's where strategy comes in. That's where strategic priorities come in. I think I can push 3 trains at a time. That's about it. I certainly cannot push 89 trains at a time, which, you see some companies come back with, these are 80 initiatives that I want to do, and I'm going to do all of them at once. No, we pick the top 3 and we overinvest our capital, our resources, our effort, and our team. And we think that with 3, we can take our business from where it is today to way beyond $1 billion, and we can do it profitably.
That's terrific. This has been super super helpful. I think for those listening in, I got one last question for you before we hop into our Founder 5, which is what has you the most excited about let's just say the next year, about life, business, whatever.
Well, I'm super excited about our team. We've spent the last 18 months building an exceptional team with functional experts, people that work extremely hard, people that are extremely smart. I always told myself, if I walk into a meeting, I want to make sure that everyone around me is smarter than me. And I think I've been able to do that. So the team is exceptional, super motivated, super passionate. We have a lot of car people. If you go to our fulfillment centers, we have exceptional people there that, they receive our product, they store our product, they pick, pack, and ship. We have over 1,000 associates. They do an exceptional job. They work 24 hours a day, 7 days a week, even during holidays. So I'm always super excited about the team and the business that we're building because, it takes people to do the job, and our people are incredible.
That's awesome. That is incredible. This has been incredible. So let's close things off with the Founder 5 quick hit questions about you, your growth, and CarParts.com's growth. The first one is, what is the top KPI or metric that you are relentlessly focused on?
Sales, margin, free cash flow. Regardless of the business, regardless of the industry, regardless of the economic environment, there's only 3 that will always be my top 3. Sales, margin, free cash flow.
All right, you heard it here first. If you had to pick one, which one would it be?
Free cash flow.
Free cash flow. A little bit of a trend going on in this podcast. I like it. All right, second one, top tip for growth stage business owners like yourself.
Build an exceptional team, focus on the culture, and prioritize.
Awesome. Favorite book or podcast that's helped you to grow?
Extreme Ownership by Jocko Willink. By far one of the best. The other one, which I'm reading right now and is incredible, it's called Lincoln on Leadership. Really good book.
I haven't
highly recommend it.
And Daily Dad.
And Daily Dad, of course, to be a great father.
Yes. All right. A piece of advice that counters what one would consider traditional wisdom.
Say no. Yes. I think you build an exceptional business by saying no, not by saying yes.
Enough said. All right. Last one. What is going to be the title of your autobiography?
Oh, I don't think I'm going to deserve one. I think I'm just going to keep working.
All right, we're gonna call it Just Keep Working. How about that? You've given a ton to our listeners today, David. So time for a little bit of self-promotion. What can how can those listening help you out?
The one thing that anybody can do right now is to go to jcwhitney.com. It's our brand new website. We just launched it. It has a ton of content on a brand that's been around for 105 years. It is going to be the flagship brand of our business. It will become a $500 million company within the next couple of years. So go to jcwhitney.com and sign up for the newsletter.
All right. And on that note, how can those listening get in touch with you if they'd like to?
You can go to, you can find me on Twitter. I'm at David Meniane. You can find me on Twitter is probably the best place to find me.
Okay. Awesome, David. Thanks for joining us on The Dirt. And this has been a real pleasure, man.
Thanks for having me, Jim. Good to see you.
Absolutely. Yeah, you too.